Retail in focus this morning with earnings out. Kohl's raising their profit outlook, but sales remain under pressure. Meanwhile, Abercrombie & Fitch regaining some momentum after posting a revenue beat. Let's get more with Bloomberg Intelligence senior analyst Mary Ross Gilbert. I got to start with Abercrombie & Fitch, just considering what the share prices are doing, up 30% more than that. What's been fueling them? This very nostalgic brand, I guess, coming back.
Yes. So what you're seeing is that the namesake brand, the Abercrombie & Fitch brand, their total sales were up 8% in the quarter. The comp gain was up 4%. So it was really nice to see a turnaround in their comparable stores, their comparable sales gains. They also had strength in Americas, but they also saw good gains, across all regions, really. And they're seeing, good traction in the third quarter with the denim business. And with Hollister, too, we should start to see those comps improve. Of course, in this quarter, they were down 3% on a comp basis, but that's because they were cycling a double-digit sales increase in the prior year. So it looks like things are back. Now, with regard to the profitability, they are benefiting from a tariff refund. So if you strip it out, yes, their earnings still beat, and that's encouraging.
Mary, and when it comes to Kohl's, obviously this is a company in the midst of a turnaround. They hire a new CEO. They're trying to entice shoppers by having Sephora stores in their department stores. What isn't working at Kohl's, though? I will say we are seeing shares up 1% now.
Yeah, well, so with Kohl's, there could be some technicality with the shares, right? Because you always have short interest involved in the stock. But so you do see a lot of volatility and movement there. Visiting the stores, I just visited a store yesterday, and I have to say that I saw the biggest improvement in terms of the merchandising and also the level of value across the store. You could see that they were much deeper in private brands, which is sort of that entry level, but they were also highly promotional. Almost the entire store was on promotion, and I would say about 20 to 25% of the store was on clearance. So I think there was a lot of value there, so that could be encouraging for the third quarter. Now, look, we're cycling 3 years of stacked declines in the second quarter of almost 14%, and they still delivered a 1% decline in comp sales. So what that tells you is that, look, it's a really competitive environment out there, and off-price is taking share. And so while they're seeing traction in different categories at various times, and as you brought up with Sephora, comps were down 4%, not something you want to see. As the brand was building, as they were bringing Sephora into stores and adding new brands, then you saw better trends. But since then, the business has matured, and if anything, they're being challenged to really sustain comparable gains there. So they still have a ways to go before we really see a turnaround here. What we need to see is some stabilization and that they can hold that.
Mary, appreciate it. That's Mary Ross Gilbert of Bloomberg Intelligence.